Trading sentiment nowadays depends entirely on the information background. Benefiting from geopolitical jitters, the US dollar advanced across the boat. Yesterday, investors detected some traces of optimism in reports from the United States. Washington came to an agreement with Saudi Arabia that the major oil exporters would boost the output to fill the gap in the tight oil market in a case of disruptions in oil supplies from Russia. Besides, the European Union countries discussing the joint issue of bonds to support expenses on energy and defense. Apart from geopolitics, all eyes are on the US inflation data for February and the ECB policy meeting. Let's talk about these events in our video calendar on InstaForex TV channel. The crucial macroeconomic events are on investors' radars today on March 10. Despite alarming inflation rates in Europe and the signs of a further inflation acceleration, the ECB will not be able to raise the key interest rate this time. The EU monetary authorities have refrained from this move one way or another for a long time. At present, when the time is ripe for taking the only appropriate decision, the ECB cannot venture into a rate hike on the back of the Russia-Ukraine military conflict. Market participants are reweighted to the ECB economic forecast. Apparently, they will be downgraded amid the current conditions that will be certainly bearish for the single European currency. Runaway inflation pushes the US Central Bank into increasing interest rates. Later on Thursday, during the New York trade, investors will get to know the US CPI for February. The forecast is extremely gloomy. The annual inflation rate is expected to conquer a 40-year peak, with a CPI at 7.9%. Under such economic conditions, the Federal Reserve should resort to more aggressive monetary tightening, in particular to raise interest rates by 50 basis points at a time. However, in practice, the federal funds rate is likely to be increased by 25 basis points. We will expand on it on the next video calendar. The new evidence of inflation acceleration will boost demand for the US dollar. On a Friday, traders will have an opportunity to assess economic conditions in the UK. The GDP report and industrial production data, both for January, are due on March 11. The optimistic forecast suggests that the British economy could have expanded by 1.9% year-on-year. It's certainly bullish for the pound sterling. Importantly, it will be the GDP reading for January. Things could have changed in February due to the hostilities in Ukraine. Currently, the sterling is oversold, so traders might find an excuse in the positive industrial production data to push the sterling up for a brief upward correction. On Friday, the economic calendar reminds us about the data on Canada's labor market. The report is likely to be in tune with a global trend of strong employment growth. The coronavirus crisis is receding in Canada like in other countries, so businesses are scaling up employment. According to the consensus, the jobless rate could have declined to 6.3% in January from 6.5% in December. The number of employed people is expected to rise by 123,000, a considerable increase for the Canadian economy. As a result, the loonie will find support and thus pushing the USD CAD down. You have watched the Forex Trader Calendar on InstaForex TV channel. We wish you profitable trading with InstaForex.